Good morning, this is Howie, trying to help you win with money, and I'm going to teach you how to try to make profits $1 at a time, and it adds up. Today is October 19, Monday, new trading week. I'm going to have a lot of activity this morning. Futures look really good. And so today I want to show you something where you can use a cover call and at the same time using a cash secure put. So stay tuned and I'll show you what I'm doing. So here you go. Let's look at Dave and Buster's. You see this? I have about 100 shares, a little bit more, 112 shares. And so what I want to show you is here's a cover call. This one expires this week at $17. And I didn't collect the whole $190. I don't know what the difference was, but I probably rolled it, so I probably collected another $10, $15. And then I created another, on this one here is a cash secure put. So this one is backed by $1,350. And the question is, why would I do this on a security that really I only have $1,000, right, $800 invested in it, right? It used to pay a dividend, so I had some shares, but I'm going to show you this. But before we do, let's take a quick look at the charts. I want to show you what it's trading like in the past. Dave & Buster's has been impacted because of the coronavirus. So we'll look at the 1 month chart. Pretty flat, nothing spectacular here. You see the dip, it did go down, right? When everything was closing, the stores, everything was down. And you would expect that. Look, this is a $40, $50 stock, dropped all the way down, $6. Like everything else, if you bought it near the bottom, right? This is 17, 20th, right? 18. Look at that, $4, and then look, it goes back up. So I've been trading this, and I'm going to show you what I did. I copy all my transaction history. Those of you know, I copy everything into my spreadsheet, which I can get from here. You see that? I put a filter on, and I've been doing it for a while, but I'm only going to show you the last maybe 3 months of data. So I copied from here into here. I'll mark this a different color today. Okay, so what I'm going to show you is, we don't need two sets of dates, so let me hide that. You know the ticker, okay? You see everything is on play. So once you see this, I'm going to hide some of these things so you don't need to see these things. Okay, so here I'm going to hide just a little bit here, and I'm going to show you what I did. So why do this? Well, let me try to show you what I did. If you look on the call side, here's an example. So I started a trade. So here, you got to look at these in pairs. I rolled it forward. It was going to expire worthless, and I moved it to next week. So this is a 1 week, right? This call is for 1 week. I rolled it, and I collected $22. If you look at my formula, let's be accurate. Let's just remove some commission, and this is how much is at risk. Now this is a call, so generally speaking, right, the value is whatever your shares are. You can do it two different ways. Some people do it based on market value or total cash outlay. If you did total cash outlay, it would be 16, right? Be $16. So that means you made 1% on this option play for that week. Okay? Let's move on. Then, when this $23 moves on to next week, it's going to expire worthless. So I end up doing it again. I roll, and this week I collected $36. And again, I don't, depending on how you want to compute it, right? 36, I was generous. I used 35. I subtracted commissions. But if you want to use $16 on my cost basis, it's okay. Either way you do it, I don't really care. I just want to show you how a cover call can make money. So these are 1% a week, 1.8% a week. Guess what? August comes around, the value is down to 10 cents. That means it's probably going to expire worthless anyway, so I just roll it. And again, let's do the math. Let's move that up to 16, depending on how you want to use the numbers. That's another 1 week, right? Okay, and so far you see what I'm doing. Here you can see the price is moving up. So now I'm going to try to roll this forward, and you can see it's probably at the money or close to it or in the money. And you can see that it's going to impact what I get in premiums. And so here I'm making less. Not a bad return though for 1 week. And then it expires worthless, which is wonderful. And then guess what? You start the process also over again. Here you go. You look at the formula. You see I collected this first, $15, which is, then I collected this when I rolled it again. So this goes with this. And you see what I'm doing? I'm rolling it up. So that means the price is starting to move. But I still make 1%. And then here you can see the price is moving. So this is clearly in the money now. Because look at the value. It cost me $268 to roll. But I'm moving it up. Right? I'm protecting myself from assignment. And I'm still collecting a premium. The net of $32 or 2%. Okay, you can see the math. I use 301 minus 268, which is, I always subtract the commission already. So that's a 2% return in 1 week. And look, I'm still catching up. And what I mean by that is whenever these go up in value, it means the share price is moving up. There's intrinsic value. It's more valuable than the actual time remaining on the contract. And so, but I do the math and you can see it. So that's cover calls only for since, right, the end of July, $217. I'm using subtotals. Okay, so now let's flip this over to puts. What did I do? Same thing. I'm doing puts. I'm going to work backwards this time, or maybe from here. So on puts is the same thing. Look, it expired. I collected 11 cents, which is 0.1. Cash secure puts, you always compute it based on the strike price, because that's how much cash it takes for you to put up. And so I divide the $14. This is not a row, so there's nothing to track. Divided by the $14 times 100 shares. So my brokerage company needed 1,400. I made 1% of my return that week. They expire worthless. Cash is returned to me. I did. And here we go. This was from a previous one, because I'm always rolling. I have sometimes 2 or 3 different contracts going on. You can see here, this one is paired with this one. You see the dates. And you can see here what's happening is the stock price was close to 14. It could have been 14.05, could have been 14.10. I don't know exactly anymore. But you can see what I'm doing. I'm rolling it down 1 week. I lowered the strike price to $13.50. Collected the net difference, which is $23. Compute the profit, right? I use 64, so I removed the commission already, minus the 40 divided by the cash outlay, 1305 times 100, and there you go. And that's 1.78% return a week. Guess what? Next week I did it again. And I think you're going to get tired of me just showing you the numbers, but here it goes again. This is a 2% return a week. Did it again. Made another 1% in 1 week. Did it again. Made 1.2%. And look, this brings you to this week. You see this? I rolled this down. Now, why did I do that? I must have did it on a day where Dave & Buster's was in the red, probably down $1.50 or something, and I rolled it down. Because as you can see, Dave & Buster's nowhere going to be near there. You see that? This contract is going to go to zero so fast, right? I got it for 36, and you can see. So I'm going to roll this. Now, maybe this week I should be a little bit more conservative. Maybe I'll roll it on Wednesday or Thursday when this contract is no longer right in the 20s or even in the 10s or the teens. I'll wait until it's single digits and then I'll roll it. But you see how much I made on cash secure puts? 1% a week on average. You see I've been doing it for a while. $700 just in the last, again, right? I just did the last 3 months. Remove the filter, $972. Don't forget, total value is roughly 16 is what I put up. Right? So if you divide, so here you go. Return rate using the combination of the two. Not bad. Now, some people say, why do you do a cover call and a cash secure put? So, because you can only win or lose on one side at a time. So by doing both, you increase your chances of making a little bit more. And that's all it is. Some people call this the short strangle. Right? Looks very close to a iron condor. The only difference is iron condor uses credit spread, so you use a little bit less cash. But this is the same concept. I use a cover call on this side, right? And I'm selling it. And on the other side, I use a cash secure put backed by my cash, and I'm selling it. And again, if it goes and trades in a range, I roll the side that needs to, and then the other side you let it expire, right? The untested side, and I just repeat. Now, I'm doing this on a COVID play. It could be high risk. This thing can go to zero. They can declare bankruptcy and the shares will be useless. So I am not buying more shares of this in my brokerage account. The profits that I make with the cash, right? The profits that I make with the cash will be used for other things. So that's all it is. Part of investing is, right? Don't just because I'm making 60% in 3 months doesn't mean I should now load up on 10 contracts or 15 contracts or 100 contracts. Because if this company goes to zero, right, you lose your money just as fast as you make it. Part of trading is learning how to take your profits and diversify it. So I do many trades, different companies. Not all of them are restaurants, or not all of them are Dave and Buster's. You know, I'm not going to do all the things that move together, right? I'm playing some S&P spiders. I'm playing Visa. I mean, there's other ways you play. Some of them are just collecting dividends. So when you blend all these strategies together, even if this goes to zero, you see I almost got all my cash back out. And so that's what I'm doing. Hopefully you enjoyed this video. And if you do, don't forget to like the video, give me a thumbs up, share it with some of your friends. It is possible to make 1% a week. I know I don't talk about percentages a lot. I always tell people I'm happy collecting $2, $3, $4, $5, $10 a week, right? And you see that I do that consistently. Some other ones like EA and Visa, they're not $5 or $10. Those are $50, $60, sometimes $100 a week per trade, or per cover call, or per iron condor, whatever it is, whatever strategy I'm using, you add that up and it adds up. So stay tuned for more videos. I'm going to show you the math of how all these things work. I have history, right? I show real data. In fact, you see this, I think I even did a video last week on cover calls of what I did unrolling it. So you saw me do this on one of my previous videos. So none of this is fake. I'm not punching these numbers in a spreadsheet and just telling you, oh, look, I made this much. There was a previous video where I show this trade happen. So stay tuned. There's always going to be more videos. Hopefully you learned something new and have a profitable trading day.